Hey everyone, welcome to the trading floor's 25 days of Tradesmas. Make sure you stick around to the end of this video to find out how you can win $1,000.
Hello everybody, I'm going to be reviewing for you a trade that was placed on November 15th of 2024. I did mark this up and place it in the testimonial section in the trading floor community. So if you're looking for it, you can find it in the testimonial section under November 15th date. I am showing you guys this trade and reviewing it for you. This was actually submitted in the middle of a strategy war season, so I do mention it in my markup here a little bit, just that this trade was a longer trade. It was a swing trade that I was running, and it did not count towards strategy wars, but it was reflected on that account because I did do everything for the month under my account. So I'll show you guys. Like you can see here in the screenshot, there are a bunch of other trades. All of these trades are reviewed over on my personal YouTube channel. If you're more interested in learning like why I took each of these trades throughout the month of November, I do go over them. But I'll give this particular trade its own video over here because this trade was a swings trade and an energy war trades. So as you can see, like even the way that the reward looks, it's definitely more significant because I was trailing this one. So I wanted to give it its own video, a little bit of love here on the Trading Floor YouTube channel. I was here on NASDAQ 100 on the 15-minute time frame. Yes, the 15-minute time frame, you heard that right. If you follow my videos, you probably hear me always say 1 minute or 5-minute time frame. And for strategy wars, I do tend to play with the lower time frames. But for my normal like trading during non-strategy war months and for things like swing trading, I really like the 15-minute or the 1 hour. So that is my little tip there. If you are looking to trade like a swing style, I definitely suggest looking up a little bit higher at the time frames. Those time frames, the higher you go up, the easier the charts get to read, and they don't have as much noise going on with like all of the consolidation that you might have in between breakouts and things like that. And when you do see the consolidation, you would know that it's that much stronger of a breakout that's about to come, because the higher the time frame, the stronger the breakout can potentially be if it's been consolidating for a while, because that means the market has had a longer resting period. Okay, so with that being said, let's look at this. What we had happen here on NASDAQ 100 prior to me even entering into this trade, you can see I have a few of these smaller trades marked up from my strategy wars trades. What was happening prior was that there was a really strong bullish trend that was happening and pushing up. I had noted on my more like daily trading type of stuff that I was doing, where I was like doing the smaller time frames, I did note that we were having a shift in momentum. It was around this 11:11 time frame. I did notice that momentum was starting to shift. It was starting to die off. Bullish pushes we were having, they just weren't as strong anymore. And then we started seeing a shift in just the market altogether, like a change of character was happening as far as market structure. So that happens all here around November 11th, and then we just kind of consolidate, right? You can see it just goes horizontally. And that is a clear indication that momentum has shifted and something's about to happen. Now, it could still mean that the market's just resting and would have had another bullish push up. However, the reason that I knew that wasn't going to happen is because this bearish pressure was just getting stronger and stronger. So your lows kept dipping lower and lower over the course, whereas your highs, they didn't really go higher. There was a little tap here, but everything else was just kind of rejection at the same price points that you were having. Whereas your lows were clearly getting stronger with as they go along with time, and they kept kind of tapping lower and lower and lower. That's an indication that the structure is starting to form a little bit there to that side, and that this support that was here is now being broken. You can see there was support. It was broken by this. There's new support being formed. It's then broken again once it does break out. But this support did not hold. So that's pressure being applied by the bearish side, whereas the resistance was holding. The resistance really didn't break that much. It was just getting tapped on. And eventually you tap enough on something and it's going to give. So whether it would have given to the bullish or to the bearish side, we weren't sure of just yet at this point. But as you start breaking through that support level and creating better bearish structure, you can start to assume that maybe your bias that we had already set back on the 11th, where we had known we were shifting momentum, that bias is likely going to continue. Now, with that being said, that doesn't mean you go and jump in a trade right away. You have to still make sure that you're getting in at the right time and that it makes sense to get in. So I was waiting for this, to kind of see if I could get another rejection. I got in at the rejection of a resistance level that had been being tapped on by all of these. So you have you have one hit, you have a double hit, you have a triple hit. To me, this is a nice strong quadruple hit here. And you also have a bearish candle pattern being formed there where you have like 3 of them in a row. That is a good indication that you're potentially having a rejection off of that level. If any of you are familiar with the 3 left strike idea or indicator that we've used, or the strategy, kind of similar to that idea of like 3 candles in a row happening in the same direction off of a level. So that can be a good indication, and that's what I was looking at. So here I had the bias for the, since the 11 for us changing momentum. I did know, that we were pushing against that support. We did break it to the bearish side. And then, we were knocking on the resistance. We were tapping, but failing to do anything there. So showing that that resistance is weakening and that it's not going to hold, and that when the support is being broken, that you're getting more pressure then to the bearish side and not to the bullish side. So all of that combined with the higher time frame reading, knowing that we are likely going to see a break happen, I was comfortable to get in here. What I was waiting for, though, like I said, was that bearish candle pattern to see some momentum being shifted. My initial thought here was that worst case, I was getting in at the top, the resistance, and I could target the bottom, the new support that we have. So, maybe you're getting in somewhere around here, and we would be targeting down here for support. That didn't work out for me because of the way that my entry candle had printed and wicked and kind of tapped into this mid-level, which is fine. It was another great indication that the bearish pressure was still there, but it meant that my entry was a little bit lower than I had wanted to get in, and that meant that I had to now reevaluate where my take profits were going to be, because if I entered here and I had to keep a stop loss all the way up here, and then the most logical take profit for me, first take profit would be here, that risk to reward, here to here for a reward, but here to here for my risk, that's not worth it to me. That's not going to play out well for you in the long run if it doesn't at least be like a one-to-one. For me, for my trading style. For other people, it might work out. But for me, it doesn't work out like that. So I knew that I needed to reevaluate where my take profit would go then, and that meant looking to the left, figuring out what's over there and what would make sense. So if I had to enter in here, that meant that my take profit needed to be at this level, and my stop loss, I did look to keep it a little snugger. I was hoping not to have to go up here, and I did look over to think where would it make sense. Again, just slightly above this mid-level. So we did break through it, and it comes back close to where I was, but thankfully it does not actually stop me out. So this was a good stop loss, a tighter one than being able to, than what I would have to keep up here. But there was a risk there a little bit. I definitely thought maybe I should be maybe even at this resistance level, or potentially even the top here. Thankfully, though, I made it through. But anyhow, that was the entry and the stop loss thought. And then this was my initial take profit. It was a 1.75 R. And once the market did get there, I was just trailing along after that. So I would secure my stop loss. So I would take my stop loss and I would kind of just move it along with the market. So as it kept breaking each of these levels, my stop loss would then move just above it. And then again, you would break down into this one, and then the stop loss would now move just above here. And I'm just trailing my trade all along, securing that profit. So you can see take profit 1 would have been a 1.75 R, take profit 2 would have been a 3.5 R, and then take profit 3, which ended up getting hit, was my 5 R. It plummets, and you can see there was so much more left behind. But that's just, it is what it is. That's trading. This is already a 2-day trade for me, so I was really happy that my take profit 3 got hit. If you do watch a lot of my strategy wars videos or the series that I make, you'll see that I don't do a ton of this in those videos, mostly because I don't like holding trades for a really long time. I like to maybe a day or two, and that's kind of my max usually. I don't like to be in them for weeks at a time. So this is perfect for me. A 2-day trade where I got to trail beautifully and perfect and get a 5 R. I'm super happy with. That's my like fancy trade for the whole month, and I'm just like happy as could be with my little 5R trade for the whole month, and that's my big boy for this account. And I'm good with that. I am okay to say that is my biggest trade and my biggest reward for this month. So that is just, for me personally, my style trading, and that's how it worked out. But yes, that's how I did this trade here. I trotted along and I got my 5R with it. And this is also potentially could have been a breakout trade too, just so I'm being clear. You don't have to be as good at price action or as confident with your rejections off of levels to have gotten this trade. You could have entered after it broke out here. So in this area, you could have entered. And the reason I'm saying that is because you would have had the dip down, your retest into this zone. So you would dip down below your mid-level, retested a little bit above it, had another of it here, and then your market structure would have been forming as well. So you would have come down, made your low, come back up, failed to make a higher high, and then you would have come down and made a new lower low that also would have broken in this area, would have broken below your support of that zone that you were in. So you could have waited if you wanted to for like this area to have gotten in for an entry if that like fit your plan better. You don't have to always be like as aggressive with your entry. You could have waited here, and then like if say you got in somewhere in this area, your stop loss could have just been like at the top of this level, because this would have been your like new step. Could have been at the like top of this level, and then you would have been good, which would have pretty much lined up with your mid zone level over here. And you could have, like I said, entered here, stop loss here, and then you could have just done the same thing, trailed all along, and you still would have gotten a really nice reward out of that. So there are multiple places you could have entered in along this move for different reasons, but I just wanted to make it clear. It doesn't have to be a rejection off of resistance. It could have been the breakout of this support too. It could have been the break of the mid-level. It could be a couple of different reasons that you're entering in. There's no right or wrong when it comes to the breakout style trading. It's just like what fits your vibe as to like what you're seeing in the market. So there's ways you can play around with your breakout style trading for sure. I just suggest that when you're starting out to stay consistent with whatever it is, so that way you're not getting yourself too confused at first, because there are different ways you can do it. And then as you get more consistent and more confident in your trading, you can look to start adding in additional ways of adding in more trades or opportunities to get in with your breakout style trading. All right, guys, that is it for this trade. I hope that was helpful for you as to how I got this 5R trade and what it was that I did. And I will see you guys in the next video.
Thanks for sticking around to the end. To be eligible for the free $1,000 giveaway, you just have to be able to receive a PayPal payment. To enter, like and comment below and come back tomorrow for another video and another chance to enter.